Overall, let's get the first reaction from the White House to the CPI inflation report. National Economic Council Director Laell Brainard joins us right now. First on CNBC, Director Brainard, welcome back. Nice to see you.
Nice to be here.
So are you worried at all about the tick up that we saw in some of these key measures that we watch? Core inflation, super core inflation, shelter inflation. It's supposed to be going the other way.
I have to say what I took away from today's report is that inflation is back down. I mean, 2.5%. That's very close to the level we saw right before the pandemic started. I think with inflation coming back down, now the focus has to be on sustaining gains in the labor market. You know, if you look at the labor market, we have seen high levels of working age participation and employment. And just yesterday, we saw data saying that median income had gone up after inflation by $3,000 over the previous year, and it's up since the beginning of the president's term. That's important for resilient consumers and continuing to see the kind of sustainable growth. So I take away from today's data that we're turning the page on inflation. Inflation is back down.
What about the warning that we did get from Jamie Dimon yesterday that there's been so much government spending and still yet to kick in things like infrastructure and Inflation Reduction Act that will keep prices elevated? We're also seeing higher wage growth, by the way, real wage growth. And that also is something that could theoretically keep prices high, couldn't it?
Yeah, so I just really see inflation coming down. It's true that real wages are improving, but it's also true that productivity is improving. So if you look at the investments that we're making in infrastructure, look, those have been years lagging. The last administration said they were going to make it infrastructure week. Every week they never made any investments. So those kinds of infrastructure investments, high-speed internet, rail, those kinds of investments, plus all of the developments we're seeing in areas like semiconductors with the CHIPS Act, clean energy, really important transition going on there, as well as in areas like AI, we're seeing a productivity boost that is sustaining those real wage increases. And that's the kind of sustained expansion that's going to create foundations for future prosperity and competitiveness in this country.
Speaking of rates, Lael, you look at some of these one-year break-evens, it's spurring some coverage on the street this week that the danger might now be undershooting the Fed's target. Reuters yesterday, Bloomberg today. I just wonder, is that getting folded into your discussions?
Well, I, of course, don't want to speak to the Federal Reserve's target, but I will say with inflation getting back down close to the levels that you saw pre-pandemic, I think it is a good time to be focused on sustaining that labor market. And obviously, as you said, I think earlier, it's really housing that is continuing to be sticky. Housing is actually an area where we are going to need to see a better market rate environment in order to really start making a dent in the supply that we need. And of course, the president, the vice president, they have been pushing for a plan to build millions of additional affordable units, and that is what's going to be necessary to really get those housing affordability pressures to ease.
Why haven't the higher interest rates done the job? And it was supposed to target housing.
Yeah, so I think what you're looking at in the housing area is a actual gap in the number of available housing units. And that's why you're seeing, particularly in the rental area, that rents are higher because the supply of affordable housing just hasn't kept up with the demand. I think you need congressional Republicans to stop blocking low-income housing tax credits and actually come together with congressional Democrats to support those tax credits. You know, just a few months ago, they blocked what would have led to 200,000 new affordable units. That would have been a nice down payment. We need to come together to support more houses, more housing affordability.
How do you react to the markets lower today on the higher inflation and potentially on Vice President Harris says odds increasing in the market after the debate last night, and wondering what a higher corporate tax rate might mean for corporate earnings and growth at a time where already job growth is slowing and consumers are softening.
Look, I think what you're seeing really more broadly is just a contrasting vision. And if you think about it, what is the congressional Republican plan? A return to Smoot-Hawley tariffs, a massive increase in tax cuts for the wealthy and for the largest corporations that will blow up the deficit and debt by $5 trillion, on some estimates $10 trillion, versus a vision which is really about lifting the middle class, which is really about making the cost of living more affordable by addressing things like health care costs, housing costs, and which is really about giving middle class taxpayers a tax cut and making sure that we pay for that by asking the wealthiest people, the largest, most profitable corporations, to just pay their fair share so that we can keep our national debt in check.